Okay, good afternoon. All right, so now we will go for chapter 2, which is evaluating financial performance. Okay, last week we went through interpreting financial statement by using cash flow analysis. Okay, so last week we wanted to see whether most of the cash flow went out from either operation or either financing or either investing. Okay, but for today, I will explain to you on how to evaluate financial performance. Okay, so let's have a look at some of the contents here. Okay, so in this chapter, we will analyze financial statement, for the purpose of evaluating performance. So as you can see here, we want to evaluate performance. Okay, and also understand the levers of management control. Okay, so that means there are some extent of let's say if the performance was so bad, and then management need to do something about it. Okay, and then few methods that we'll cover in this chapter, okay, which is we have to analysis in terms of return on equity method, and the last one will be income versus cost variance method. So there will be two types of calculation. Okay, let's have a look at the first method. The first method we call as return on equity method. So we define this as an ROE. Okay, ROE, return on equity. All right. So if you look at the word return on equity, there are two words associated here, which is return and also equity. All right. Return is usually associated with profits. Okay. So we want to see how much dollar profit that need to be available to distribute to the shareholders. Okay, so it is by far the most popular yardstick of financial performance among investors and senior managers. We call it as a benchmark. Okay, so mostly most of the investor will look at this ROE, return on equity. If ROE is quite high, that means the performance is very good. So how to define ROE? So ROE is the formula will be net profit divided by total equity. So to find net profit, usually net profit we can get it at a income statement. Okay, income statement. And total equity is usually we can get from balance sheet. Okay, so it is important to analyze ROE because it's a measure of efficiency with which a company employs all the capital. In other words, how productive company is against own capital. Because why? You need to remember that the companies, the companies, let's say ABC. Okay, so equity comes whereby they will invest it into the company. So this is an equity. So therefore, ABC job is to ensure that there must be profit, and then the profit will go back to ABC, and then ABC will need to distribute to equity holders, okay, which is shareholders. So in any kind of business, regardless of small business or large business, the profit that gained from company need to be returned back to equity holders. Okay. All right, so there are three determinants of ROE, which is three indicators of ROE, which management can do to increase efficiency. We're talking about to increase all those components. So let's expand the ROE formula. So these are the original formula. Okay, ROE is equals to net income divided by sales, multiplied by sales divided by asset, multiply by asset divided by shareholders equity. At the end of the day, you need to multiply by 100 because the answer will be usually in percentage. Okay, usually in percentage. So as you can see, these are the net income divided by sale. In other words, net profit divided by sale, which is referring to the profit margin. In financial management later on, chapter 2, you will learn on those ratio in chapter 2 on this Friday. How to find net profit margin, okay, and then how to find asset turnover and financial leverage. Okay, the second one, sales divided by asset. These are the formula of asset turnover, which is $1 asset generates how many sales. Okay, this one $1 sales generate how many income. And the last one, asset divided by shareholders' equity. Okay, this is the formula of financial leverage. Okay, so that is first thing. Alright, so if you simplify the formula, okay, you see sales here, and then sales, you can remove, right, because those two are same. Asset also same thing, and yeah, it's left of net income divided by shareholders equity. So the simplest formula of ROE will be net income divided by shareholders equity, because sales are same, you can remove, yeah, and then assets are same also. Yeah, so that is a little bit on the original formula on ROE. Okay, so the earnings squeezed out of each dollar of sales, we call it as a profit margin. Okay, we're talking about $1 sales generate how much net income. The sales generated from each dollar of asset employed, that means $1 asset generate how much sales, which is asset turnover, because the word turnover is referring to sales. Yeah. And the last one, the amount of equity to finance the asset, that means $1 equity, how much they may call it as a financial leverage. Yeah. Okay, so below here are the extracted financial information for four companies, which is company number 4. Okay, this one, ROE. Okay, which company would you like to recommend to invest? Yeah. Okay, so they give you total asset, they give you total liability, total equity, they give you sales, and they give you also net profit. Okay, so you need to memorize this formula. Okay. Alright. So for companies, you need to calculate return on equity for each in percentage. So as you can see here, this is a multiply profit turnover, multiply by financial leverage, and then don't forget to multiply by 100%. You will get return on equity. So this one, net profit divided by sales, sales divided by total asset divided by total equity for each one. Okay, for each one, you see net profit divided by sales. This is the net profit. Okay, divided by sales. 8312 divided by 8 million. Okay, and then sales divided by total asset. Sales divided by total asset is here. Alright, 0.92, and then total asset divided by total equity. Total asset, this one divided by total equities. So you got this one. So that means they didn't use total liability. Total liability is not much we're talking about in this ROE calculation. Okay, so once you calculate this one, yeah, okay, and then multiply, you can get this one. Yeah, after you multiply by 100, so you can get the desired answer. So once you calculate with 4 companies here, 1, 2, 3, and 4. Okay, the second one, to conclude that, you need to choose the highest ROE. So in this case, 6.51, 66.11, 6.01, 14.02, definitely this is the highest, 66.11. So these are the answer to just to conclude that I will choose to invest in Maybank because it has highest ROE by 66.11%. Okay, so that is how to answer that question. Yeah. Okay, I will stop here for a while. This one will be another calculation. All right. Any questions so far? Any questions so far?
Sir,
Yes.
calculate the profit turnover assets,
This one.
turnover, profit margin asset turnover.
Mm-hmm. All right. The formula will be given, Yanisha. So you just follow the calculation. Okay.
Uh,
Don't worry. I will demo to you the study question. Okay. Let's have a look. Okay. Let's have a look at question number 1. Okay, let's have a look at question number 1. Sometimes, okay, but before that, just to let you know that sometimes they can be given in year because you need to compare by year. Sometimes they can give company. So you will choose the best company and also the best year. Okay, so let's have a look at, no issues there. Yeah, the calculation is similar. So you just follow the process. Okay, let's have a look at question number 1. Okay, below here are the 3 years financial information provided to be analyzed. Okay, so 2015, 2016, and 2017. Okay, so these are the information there. Calculate ROE for the year 2015, 16, and 17. And based on A, which year performs better in terms of ROE and why? Okay, let me demo to you how to do this. Okay, question 1. Alright, general formula. Okay, general formula for this one. ROE, yeah, return on equity, which is equals to, need to check back, profit margin, that means yeah, net profit divided by sales. Okay. And then you need to multiply by sales divided by total asset, and then multiply by total asset divided by total equity. So these are the original formula, and you will use this formula for all those elements, which is in, yes, this one, for all 3. Okay, you don't have to write 3 same formulas. You just put one for all. Okay, so the first one is ROE for 2015. ROE 2015. Okay, ROE 2015. I just put here ROE 2015. Okay, so the formula will be, sorry, not the formula, the equation will be, okay, net profit divided by sales. Look back at the question. Okay, you see net profit is here, this one. 558,495 divided by sales. Sales is here, this one. 523,600. Okay, and then next, sales divided by total asset. So you can see here, sales 523,600 divided by total asset. Total asset, this one, 2015, 5,646,100. And then multiply by total asset divided by total equity. Okay, so total asset, same thing as here, 5,646,100 divided by total equity. Total equity is here, this one. You see here, total equity, right? Okay, so 3,509,600. Okay, so so you can calculate one by one. You can press calculator, which is calculator. All right, divide this one first. Yeah, divide this one first. 558,495 divided by 523,5,600. Okay, just take 1 or 2 decimal points. That's enough. That means this one 0.11 by 523,5,600 divided by, this is the second part. Second part divided by 5,646,100. You can get here this one 0.93. Then multiply by this one. And this is the next part. Yeah, 5,646,100 divided by 3,509,600, 1.61. Okay, so multiply those three, 0.11 multiply by 0.93 multiply by 1.61. You can get this one, 0.164 16.7. And then don't forget to multiply by 100. Okay, multiply by 100. So you can get 16.74. 47 or 7%. Okay, I purposely show this long calculation so you can understand the detail of it. But if you expert already, that means you know how to calculate easily, you may have a shortcut. A shortcut means that you don't have this, you don't have this, you just put your workings and then you just put your answer straight away. Yes, you can do that as well. Okay, because I just show here to make you understand better. Okay, let's have a look at ROE 2016 because we still have another 2 years here in this question. Okay, ROE 2016. Okay, for net profit divided by sales, this one, net profit divided by sales, yeah, 864375 divided by 6103350. Okay, next will be okay, this one. Sales divided by total asset. Sales divided by total asset. 6103350 divided by 7031700. And then multiply by the last part, which is total asset divided by total equity. So total asset is here, total equity is here. All right, 7031700 divided by total equity 4975300. Okay, done this one. All right. So if you expert already, you can come up with this one. Okay, you do a bracket 864375 divided by 6103350 close bracket multiply by okay 6103350 yeah divided by 7031700 okay and then multiply by 7031700 divided by 4975800 and press enter. Okay, you get there 0.1737 and then you just straight away multiply by 100, 17.37%. Okay, that is a second answer for 2016. Okay, now the last part in the question is 2017. So ROE 2017. Okay, so same formula. Maybe I just copy and paste. So I just put the numbers. Okay, for ROE 2017, which is net profit divided by sales, this one 1377975 divided by sales. Sales is this one 7508150. And then I just go this one. This one same because it's a sales 7508150 divided by total asset. Okay, which the total asset this one 8368800. Okay, and then the last part 83680 divided by total equity. Total equity is this one 6129100. Okay, so press the calculator and then you will get the answer 1377975 divided by 7508150. Okay, and then multiply by another bracket 7508150 divided by 8368800, and then multiply by 8368800 divided by 6129100. Okay, 0.2248 multiplied by 100, you will get 22.48. Okay, so you already calculated for this one, ROE for 2015, 16, and 17. That is a question A. Okay, so that is a question A. Okay, for question A, done already. Alright, so next question. Based on A, that means your answer here, which year performs better in terms of return on equity and why? Okay, so to answer question B, you need to compare this one. Okay, once you done that, yeah, you will choose the highest. So, yeah, okay. So you can say that 2007 perform, sorry. Because it has highest ROE by 22.48%. So 2017 performs better in ROE because it has highest ROE by 22.48%. Because you choose the highest, yeah. ROE means profit, profit return to the equity. Yeah. So the higher the profit towards the equity, the better it will be. Yeah. So as a conclusion, yeah, 2017 is the highest one. Yeah, 2017 performed higher in ROE because it had highest ROE by 22.48%. Okay, done with this one. All right, another question. Use the same formula and then same way on how to do that. Just to alert on sales, net profit, those items, and then the figure that you put and then the calculation are also very important, yeah, to avoid those mistakes. Yeah. Okay, now I open to any questions. Any questions so far? Yeah, Yanisha and Yap, any question?
Sir, so far no, but last week class you taught us some the increase and decrease in cash,
Yes.
about the cash flow statement, how to do
Mm.
the cash that one I still confused, sir.
Okay, no worries. That one I will talk later. But Yanisha, before I will teach you again this one. Okay, probably you can go to this my YouTube channel because last week recording was in here in my YouTube channel. Okay, go to this playlist and then go to this one, investment and financial analysis. Okay, this is the last week video, Yanisha. You can find it here. Okay, study this one first, and then later on, I will any further issue, then I will come back to you later. Is it okay?
Okay, sir.
Yes, yeah, it is in my YouTube channel. I already uploaded last week, and even today's class also, I will upload by tonight. Yeah, I will upload
Uh,
by tonight, so you can have a look. Okay. Yep. Any question? How about you? Yep. Any question? Okay, no. Okay, if there is no question, we can take a 3 minutes break. Okay, and then I will teach you on how to do, not 5 minutes, I will teach you on how to do variance analysis. Okay, take a break, Okay, let's continue with the next part. Okay, the next part, we were going for another analysis, which is income versus cost variance method. Okay, this one only applicable in income statement only, which is to see the differences between profit and loss. Okay, so income versus cost variance method. Another easier method for accountants and financial analysts is to compare income statement. You see, compare income statement between last year and current year. Okay, let's say if you want to find the performance on 2020, that means you need to compare with 2019. Okay, but let's say if you want to analyze on 2017, that means you need to compare with the last year, which is 2016. So without comparison, you will not know whether the income and expenses performance is good or not. Okay, so you need to compare year by year. So the objective here is to, okay, why we should do this one? Yeah, in fact, this is one of my favorite as well. To detect what cost of net profit increase or decreases tremendously, because we want to see the changes of net profit. Yeah, okay, net profit can be increased and net profit can also decrease as well. If net profit increase or decrease tremendously, that means a huge amount of changes. Okay, let's say 2020, which is 1 million, and then last year was 100,000. So therefore, it's a difference of 900,000. We want to see why. Yeah, we want to see why is it happen. Yeah, why those huge amount that leads towards huge marginal. And the last one, the second one is to detect which cost contribute the highest. Yeah, means because we have so many types of costs. Yeah, later on I will show you on which part. Okay, cost. All right. I'm skipping this one. All right. If you understand fully on financials, not financial performance, we're talking about profit. Yeah, that means statement of income and loss. Okay, so you see here the word less. Okay, this is the less. Okay, this is less. This is less, and this is less. Okay, that means we have cost of goods sold, operating expenses, research development, depreciation expenses, interest, and income tax. Those less elements are considered as cost because, as you can see here, these are the sales. Okay, sales, which is the only revenue that the company can get. That means they need to minus everything, every cost before you will get this one net profit. Okay, this is a net profit. Okay, so the steps in income versus cost variance method. Okay, so the procedure here to calculate this one, you need to follow the procedure correctly so you can get the right answer. The first one, calculate variances for each components in income statement, except gross profit, earnings before interest and tax, and earnings before tax. That means, this one don't have to, no need to calculate. This one no need to calculate, and this one also need to calculate. Okay, I think it might be confused, so let me erase everything. All right, this one cannot, don't have to, then don't have to calculate the variance. This one also don't have to, no need. This one also no need, and this one also no need. Okay, so you need to compare. That means you need to calculate the variance. Means the difference, the changes. From last year until the current year. That means 2017 compared to 2016. So these are the formula. Current year divided by last year divided by last year multiplied by 100. So that means in this one, current year, this one current year divided by last year, and then also divided by last year 6103350. Okay, so let me go through. Okay, so to calculate that, let's say here this one. Okay, I'm go for this one. Yeah, okay, for sales here. variances, which is equals to 7,508,150 minus with last year, this one last year, 6,103,350, and then divided by 6,103,350, and then you need to multiply by 100. So you can get those answer. Okay. So not only for sales, yeah, but also for all these things. Yeah, cost of goods sold, operating expenses, research, development, depreciation taxes, interest, and then income taxes. Yeah. Okay. So that is the first one. Okay. So as you can see here, from this example, these are the variances. Yeah, these are the variances. But for this one, the amount negative, yeah, I will show you the negative. The negative means that you need to consider as well. Okay, so let me show you on how to calculate the negative variances. Okay, let's say one of the example is COGS. Okay, as you can see, COGS. Okay, for COGS, okay, the current year is 2017, which is negative 4,001,600 minus with this one negative, negative, and then this one 3,392,800, and then divided by, you need to consider negative as well, 3,392,800 multiply by 100. Okay, so you need to consider the negative sign as well. Okay, so negative 4,001,600, negative 4,001,600, negative. Okay, because this is negative and negative. So if negative and negative, that means it is plus. Okay, negative and negative, it will become plus. Yeah, you see, negative is negative. So that means you need to plus with this one, 3,392,800. Okay, divided by, do not forget negative as well, 3,392,800, and then multiply by 100, so you can get 17.94%. So you will get this one, 17.94%. So that's why, you can see here, it's not this one, sorry. I see, negative 17.94%. All right. Sometimes, you might find out that, okay, there is a, okay, this is a positive variances. That means positive variances means that 2016, 2017, which is going up. That means increase. Yeah. Okay. Positive variances means that there is an increment. Okay. Increase. Increase. Okay. Same procedure. This one minus, and then divided by this one. This one minus, and then divided by this one. This one minus this one divided by this one. Okay, as you can see here, gross profit no need. Earning before interest and tax no need. Okay, this one you got negative. Negative means that decrease. That means 2016 to 2017, the amount is decreasing. Yeah. Okay, and then earnings before taxes don't have to. Income tax, yes. And then the last one, earnings after tax, also yes. Okay, so this is how you calculate the variances. And then from variances, the second step is to this one. You can comment by highlighting these components. Okay, so you can have a look at performance of earnings after tax and net profit after tax. And then which sales and cost leads to significant variances that affect performances. Okay, sales look at the increment percentage, cost look at the highest decrement percentage. Okay, why sales increment? Because sales positive value. If cost, that means highest decrement mean that because of the negative, that means less ones. Yeah. Okay, so this one negative means that means minus. I mean, we want to see which one as the highest cost. Okay, as you can see, this is my narration here. Yeah. the performance indicated that this company perform better. Okay, perform better. Okay, why I said perform better? Have a look at this one. Okay, why I said perform better? Because of this one. %59.42. Okay, because from 2016 until 2017 there is an increase of profit. Yeah, increase of profit. You see here, because of earnings after tax increased by 59.42%. From this amount in 2016, this one 864375, this one from this amount to that amount, yeah, 1377975. Yeah, you see there is an increase, which is good, eh? Okay, if let's say if 2017 is higher than 2017, which is the amount is decreasing, that means we can call this as a not good performance. Yeah, I mean company perform bad. Okay, so we want to see why. This was because of huge contribution by sales, which increased by 23.01%. So how do I get this one from here? This one. Okay, there is an increase of sale, yeah, from 2016 to 2017. Okay, from this one. Yeah. Okay, so if increase, you can have a look at sorry, if increase, you can have a look at the sales and probably the other factors. But if there is bad, you need to look at the cost. Yeah. Okay, I repeat again. If let's say this company perform better, okay, this one is better, you need to look at the sales. But if let's say this one is negative, yeah, that means perform bad, you need to look at the cost. Which cost leads towards the poor performance? Yeah. Okay, so this one, that's all. Okay, let me illustrate to you on how to answer this part. Hold on a second. Okay, have a look at study question for part B. Okay, part B, let's have a look at question number 1. Part B, question number 1. Alright, given below is a financial statement for Royata Berhad as 31st December 2016 and 2017. So you need to look at 2016 versus 2017. I think this one is already done, right? Oh, this one already done. I think let's have a look at this next one. Okay, let's have a look at this question 3. Statement of financial performance for years ending 31st December 2015 and 16. Okay, so these are the sales. Okay, and then this one, yeah, which is less, cost of goods sold. Okay, which is minus. Okay, this one also. Selling admin, general expenses, depreciation. Yeah, minus. Okay, interest also minus. Taxes also minus. Okay, all right, let me go through. Before I answer question A and B, give me some time to do this one. Okay, question 3. Okay, give me like 2 minutes to do this.
Sir, your YouTube your name is Abdul Adi Mustafa, right?
Yes, correct.
But I cannot get you, sir.
All right. Later I will share with you. Hold on a second. Let me do this one first. Selling an admin, general expenses. Do you spell my name correctly, Yanisha?
ABDHADIMUSTAFFA.
Yes. Okay. This one. Let me put in. This one. You see my name here. You search this one, and then you click search. Here it is. Let's have a look. Okay. Try to look at this picture, my profile picture. Okay. If you still cannot, let me know. Okay, Texas. This one 2016 M 1000. And then Variance. 4600 3567. Okay. 03. Good. 184. So let's have a look at 2015. 800. Right. Okay. I highlighted this one. Okay, yellow means don't have to.
So,
Okay. Yes.
so in the example, they calculate the earning after taxes.
Yes.
What you highlight in yellow color.
Okay. Highlight means that you don't have to calculate variances.
But in the example, they calculated the earning after taxes.
Oh, sorry. Oh, yeah, correct. The last part. I'm sorry. All right. Thank you for the. Yeah, I should do that. Okay. Thank you. All right. Let's have a look at this one. 2016 minus 2015, right? So you need to 2016 minus 2015 divided by 2015. So let's have a look at this one. Okay, sales first. Okay, sales first. 4600,455 minus 2800,699. Enter, divided by 2800,699. Multiply by 100. So you get here 64.26 cent. Okay, the next one. Okay, this is negative. So you need to be careful. Okay, negative. Okay, so negative 3567723, enter, minus negative 0 minus 2200545, okay, enter, and then divided by negative 2200545, multiply by 100%, which is 62.13, 1%. Okay. Right, the next is selling and admin, which is negative 140, sorry, negative 140,033, yeah, minus with negative 220,677, yeah, divided by negative 220,677, which is multiplied by 100, negative 36.54. 36.54%, which is drop, okay, drop massively, okay. Selling expenses negative 100,477 minus with negative 150,466 divided by negative 150,466, and then multiply by 100, negative 33.22, which is drop, The next depreciation, negative 184,556, minus with negative 233,656, and then divided by negative 233,656, and then multiply by 100, negative 21.01%. The next is interest, negative 54,200 minus negative 54,800, divided by negative 54,800, multiply by 100%. That means 1.09%. Negative 1.09. Next, taxes, negative 154,970, minus negative 77,180, and then divided by negative 77,180, multiply by 100, you get 100. Is it 100? Okay, let me check again. Negative 154,970 minus with negative 77,180, and then divided by negative 77. Okay, sorry, I repeat again. Negative 154,970 minus with negative 77,180 divided by negative 77,180. Okay, which is 1.00. That means 100%. Multiply by 100, 100.79%. Okay, and the last one, 398,496, minus 198,462 divided by 198,462, multiply by 100, 100.79%. Okay, which is almost similar lah. Okay, so you're done with this part. Okay, so as you can see, look at the final one, which is increased by 100%. That means almost double, So this one we can say that since this is positive, that means the answer will be quite a very good performance. Yeah. So to answer A is done already. Okay. Question A is done. Calculate the variances. Okay. Done, This cost of goods sold, total operating expenses, everything is done. Is here, Okay. And then based on A, what is the performance of earnings after tax and why? So to answer question B, that means you need to look at based on A. Okay, the performance, you can say that the performance for 2017 is improving from year 2016 by 100.79%. Okay, it is because of the increase in sales. Sorry, I think you can break down your answer a little bit. Okay, the first one, you can have a look at one of the factor, which is this one. Okay, 64.26, which is increase sales by 64.26.
So it's 2015 and 16.
15 and 16, sorry. 15, 16 and this one 15. Okay, thank you. Okay, from RM to 800,699 at 2015 to RM 4600455 on, sorry, not on in actually, in 2016. So that is the first part. Okay, another part maybe you can consider of is which is this one, decrement of cost. You see here, 36.54, 33.22, and 21.01, which is quite okay. So decrease cost by 36.54% for selling and admin expenses. They decrease because as you can see, why I put decrease is significant to huge improvement on profit, because the formula is simple. If you minimize the cost, the profit will be higher. Yeah. If you increase cost more, the profit will be smaller. So that is a formula. Okay, I repeat again. If you decrease cost, if you decrease the cost, the profit will be higher. But if you increase your cost, the profit will be smaller. Yeah. Okay, 33.22%. And the last one, decrease by
So negative 21.01, right? Negative, right?
okay, you don't have to put negative because decrease shows that negative. Yeah, the negative is explaining the decrease already. Okay, so the negative the negative sign is explaining by the decrease, so you don't have to put negative anymore. Yeah. Okay, so that is some kind of explanation. So that means your explanation purely based on the variance that you calculated. But negative 1.09, you don't have to, because quite small numbers. Quite small numbers, you don't have to do anything about that. Okay.
Sir, another question, sir.
Right.
For the less cost of goods sold, admin expense, general expense, why you put bracket for both here?
Okay, bracket here. Okay, bracket means less. This one less. Less. That means in Malay you kena tolak. Kan, in income statement format, Yanisha. Okay, I put bracket because it indicates you need to minus this one.
I can understand minus, right? You minus the both number, right? But
This
why
one,
you put bracket in the number?
this
So
one.
it become
You say this one, right? Is it this
uh
bracket?
yeah,
This one.
yeah, the bracket.
Okay, you see, the format of income statement. Okay, the difference between bracket and without bracket. Listen here. The difference between bracket and without bracket is, without bracket means a positive number. That means add, tambah, But the bracket means that minus, So as you can see, let's say, sales, I calculate to you this one. I calculate to you this one. All right. So 4600455 minus, this one is bracket, so you need to minus 3567723. So you get 1032732, which is this one. And then you need to less 3 expenses. Remember, Yanisha, in accounting, expenses, do you have to add or less? Usually.
Expenses less.
Less. Sales or revenue, you need to add, right? Correct?
Yes.
So that's why I purposely put bracket to show that we need to minus. Yeah, we need to minus. So
Okay.
I purposely done that. Okay. Yep. Any question? Okay. Yep. Any question? So far no question. Alright. You can try later on. Yeah. Question number 1 again and question number 2. Okay. By using a same procedure. Okay. As you can see here, this one also same thing. Yeah. Minus, 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 minus. Okay, gross profit is a gross profit. The answer, operating profit is a gross profit divide minus this one, and then income before tax, which is operating profit minus interest, and then net income, which is income before tax minus income as interest. But in the question, usually, in the question that I put, in midterm and also final, usually I must put bracket. Bracket means that to show that there is a minus. Yeah. So just to make you understand, to read this one. But this is from university question. So the problem with university question is sometimes they didn't put bracket or minus to test student on is to we call to test their understanding. Is it when is the time they need to minus or plus? That is quite challenging for university student. Okay, but for yours, I must put, yeah, to make you understand better. Okay, so
So, sir, can you put the bracket minus